Hi, this is Daniela Cambone for StansberryInvestor.com, and welcome back to our summer series. It's our mid-year touch base where we've brought back some of your all-time favorite guests. And joining me today is Keith Neumeyer, the CEO of First Majestic. They're a Canadian-based miner with operations in Mexico, and he's one of the most popular and vocal mining CEOs out there. So Keith, welcome back to Stansberry Investor.
Well, hi, Daniela. It's a pleasure being with you today.
Yeah, I thought it'd be great for us to have our mid-year touch base here, since the last time we spoke was at the start of the year, and a lot has changed. And I want to get your gauge and understanding of the precious metals market right now. So just to refresh everyone's minds here, when we spoke, it was really in the middle of that silver squeeze. The First Majestic stock had burst through $30 an ounce. It was impossible to get silver inventory. In fact, you had to shut down your site where you sell bullion. And here we are today. The stock has, the company stock has corrected here. But at the time, I remember when we were speaking, you weren't happy with that breakout.
I'm never happy with anomalies, because I've been in the market for 35 years, and I just, and people just get hurt, more than anything, and because most investors, don't have the history, and then they don't really know how to react in types of situations like that. So, everyone wants to make money, obviously. So they chase, and they come in at the wrong time, and then they often sell at the wrong time, unfortunately, as well. So, and then they could be buying on margin. They could be, anyways, it doesn't. I'd prefer to see a more sustained, long-term growth. I think silver should be $30 an ounce, and it was there for a very short period of time. I just didn't like the fact that it went there in a matter of a couple of days. And also the stock, when it did what it did, it doubled over a matter of a couple of days.
So let's talk about that momentum that we saw in the silver market, because as you know, the suffering of the silver investor has been a long one, Keith. So, and there was a lot of excitement and hope around silver at the time. There was talk about the Green New Deal and all the initiatives. Where are we at now in the cycle?
Well, all that's still there. I think I'm a big cyclicality guy. I'm a seasonality, investor. The best time to be buying mining stocks is in May, June, and July. You go back 30 years, and it's not always perfect, but it just happens, to be, for whatever reason, sell in May and go away. That the sector falters, and the metal prices drop. And you look at silver, the worst month for silver is June. And it's been like that for decades. So, I've had bids in my favorite stocks over the last month or so. I'm surprised I bought so much stock over the last, couple of weeks. I didn't expect to see the prices I'm currently seeing. But, despite, one side of me saying, geez, this is really ugly, on the other side, I'm saying, wow, this is great. I could buy these stocks at such a cheap price.
So let me ask you, Keith, because, I've had other silver experts on, including David Morgan on recently, who said, look, the fundamentals for silver, echoing what you're saying, still look great. The demand is there from the investors, and the scarcity is there from the mines. So what's it going to take if all the major pieces are already in place?
Well, the flaw in the market in the entire mining sector is that the miners allow our commodity, our product that we produce. It's like if you're going to produce a pair of jeans, you're going to sell those jeans at a fixed rate of return, in order for that business to grow, or at least make a profit. And the mining sector doesn't have that possibility. We don't control the price of the product that we produce, which is a flaw for us. And the mining sector, in my opinion, needs to get together and change the way the pricing environment works. When the miners produce 750 million ounces or 780 million ounces of silver a year, and the paper market trades 1 billion ounces in one day, that's a problem. So, if there is demand, for the paper market, which there we did see the Reddit crowd jump into the futures markets and drove the future price up. It's not that difficult for the paper just to be printed out of nowhere, and there's really no limits. The banks have no limits. They can sell as much paper metal as they wish to sell, and then the only really thing that there's two solutions. One is the investors need to buy physical metal, because if you take the physical metal out of the market, the sector, the paper market, has nothing there to back it, because there has to be some physical backing for them to manage the odd delivery that does occur. It rarely happens, but when it does, they need that metal. So if the investors can take that metal off the market, which is what I advocate, and the Reddit crowd and the Wall Street Silver crowd are currently advocating, and which now is 120,000 members from 0 a year ago, which is fantastic. And then now there's a huge effort behind the scenes of stackers and so on. So we have a new buyer, and I think it is working. It is, but we have to just keep up the fight. The only other solution is regulators step in and say, okay, banks, you no longer can just sell unlimited amounts of paper. You have to have some kind of physical backing. And that goes to some of the discussions around Basel III, and there was some hope around that the banks were holding paper gold, would have to actually have physical gold, and they couldn't use paper gold as a way of using that as some kind of equity within their balance sheet. We'll see how that all works out, but that's really the only two solutions.
Okay, so let's take that one step further. You said a lot of good stuff right there. So what I'm hearing from you, the only way to beat manipulation, besides waiting for a crackdown on the banks, and we've seen crackdowns happen and manipulation continue, the only way to beat it is to take physical inventory off the table.
That's my opinion. Yes.
Okay. What kind of volumes, though, would we have to see?
Well, if you look at the Silver Institute's numbers, and then their 20, just from memory, the 2020 number of physical consumption was, I think, 196 million ounces, or call it 200 million ounces. Now, I don't know how they come up with that number, but we could talk all about data collection and my views on the 3 data collection services that supply us this information, but that's a bit of a different topic. But nevertheless, let's call it 200 million ounces. So, we have a mining sector that produces approximately 800 million ounces of silver per year, peaked out at 890 million ounces back in 2016, and it's been dropping every year since. In 2020, through COVID, we produced 780 million ounces, but we're likely to get in 2021 back up to, call it, 800 million ounces. But you've got the retail buyer taking 200 million. Let's assume the numbers are correct. 70% of all this silver that we're producing goes into electronics pretty well. Automobiles, solar panels, computers, cell phones, refrigerators, freezers. It was interesting. I was talking to my trader in New York a few months ago, and during, well, it was actually a little bit longer than that, about 6 months ago. And one of the biggest demands for silver was freezers. Due to COVID, there's this run on freezers. And
interesting.
And the freezer companies couldn't produce enough freezers because they couldn't get enough silver to produce the freezers. So, people don't actually realize that silver is a strategic metal. This is not a metal that is just, used to be coinage or used to be in photography. This is something that we critically need as the human race to survive and to do all the things that we want to do to make our lives better. And without silver and copper as well, but without silver, we just couldn't achieve all the objectives and goals that we have. So if you've got one buyer of 200 million ounces of silver in an 800 million ounce market, then you've got solar panels who are consuming about 100 million ounces. You've got electric cars, which are consuming about 100 million ounces. And you've got about 1 billion fuel combustion cars sitting on the surface of the earth that need to be replaced with electric cars over the next 10 or 20 years. Where's all this silver going to come from? So, I don't think that you need the retail buyer to buy much more. Is the number 250 million ounces a year? I don't know.
Right. Well, according to the research reports that I know that you dispute often, they would say it's coming from the miners. There's more than enough silver being scooped out of the ground.
Well, they're wrong. At $25 silver, just do the math. So if you have, no one knows how much silver is in an electric car. I dispute, and I say that approximately a kilo of silver is in an electric car, and it's used to to join the computers together and with the battery packs and high speed, super important computing capacity is required, and so you need silver to do that work. And it's non-replaceable. You can't do it with any other metal except gold, which is not going to happen. So, if you have, there's 1.4 billion cars on the surface of the earth, and we're producing 90 million cars per year, the auto industry globally, and of those 90 million cars, 4.5 million are electric cars. Electric car consumes 3 times more silver, approximately, and of course we don't know the exact numbers. We're guessing a little bit, than a normal fuel combustion car. So how many billions of ounces is that needed? And some governments want to eliminate all fuel combustion cars from their streets by 2030. Others have said 2035. Some have said 2040. But that's a big effort. Where's the silver coming from? And you see peak silver is 2015. It's in the Silver Institute's data, and it's been dropping every year for 5 years. So I don't see why people dispute that.
I also want to get back to the point you made earlier that, you would like to see the mining industry come together and fight the discrepancies together. I know like I've said, you've been one of the most vocal silver mining CEOs out there, leading the charge, trying to make a change. When you approach other mining CEOs or the industry as a whole, what has the reception been like for you?
Well, I'm a bit of a lone wolf. I shouldn't say that completely, because there are people out there that actually do believe some of the things that I believe as well. But I guess it's just my banking background, and I just think a little bit differently than others, I suppose. But yeah, it's been difficult. I haven't really got the reception I would like to see. Most of the silver, unfortunately, comes as a byproduct, right? And there's First Majestic. There's a few other companies that are like us that are there. There might be 10 companies worldwide that have you could call them actually a silver mining company. And the rest of them are zinc companies or copper companies, and silver barely even shows up in their financial statements. It's barely even a line item, and they don't care about it. It's just it reduces their cost of producing copper or producing zinc. So they hear from a guy like me saying, "Hey, let's get together and come up with a different pricing mechanism." They go like, "What's the need? We're happy." So nothing happens.
Maybe eventually there'll be some change, Keith, but I guess for our viewers watching at home, they love talking about price. They love hearing price. And we saw what last summer did for the precious metals. Gold hit a nominal high last year when no one was expecting it. Everyone had ruled out gold, and it was an incredible summer for the metal. What can we expect as we head into the second half of the year here?
Well, I'm disappointed with the action over the last couple of weeks. I wasn't actually expecting to see silver correct as much as it has, but we've got this whole the dispute going on or debate going on about transitory inflation, sticky inflation, interest rates. Everyone was on the wrong side of this trade. Everyone was long copper, everyone was long oil, everyone was short the US dollar, everyone was expecting higher interest rates, so they were short bonds. And now everything's unwinding. Copper's collapsed, oil's collapsed. Look at oil prices today. Who would have thought that oil would be back to $67, and copper's barely holding $4. So this whole inflation trade is unwinding. So all these institutions that were on the wrong side of this trade are forced to liquidate. The lumber, for example, corn is just right across the whole commodity sector. So there's been institutions are just getting laid out right now because they were just on the wrong side. So that's going to take some time to unwind. These things never get fixed overnight. We're also in the summer months as well, which I've already touched on, which is always generally kind of a weak period. So, we can have to probably wait this out until August, September, until we see a bottom or at least some kind of stability. But my target for silver is still $30 for the end of the year.
It's interesting, mentioning the inflation play here, because a lot of Bitcoin, proponents disappointed because they had argued, it's going to excel in an inflation trade, and Bitcoin not performing with rising prices here. In fact, down 9% in July. So that's a really good point, that a lot of assets people were banking on during inflationary times, are in fact failing.
That's right. And a lot of money was on that trade. So when you get the street on one side of any trade, and then all of a sudden it goes sideways, they can't hold on. These are not long-term investors like you and I who can wait it out and say, okay, well, I'll wait another year for silver to get to $25 or $50 or whatever your target is. These institutions are trading daily, and they're getting measured on a daily, weekly, monthly, quarterly basis. So they can't afford to take losses. So if a trade goes sideways, they're out, and you got 1,000 institutions doing the same thing, and they could move markets as we're seeing.
Keith, just want to bring things home here with talking First Majestic, company specifics here. Gold production. One thing that jumped out to me was the company saw a 95% increase quarter over quarter in gold production, mostly as a result of the new mine you acquired in Nevada here. Can you tell us more about this?
For sure. This is, I put the company together 19 years ago, focused on silver in Mexico. And I think we did a darn good job, in M&A, and then built quite an interesting company. And we got to a point where we were ready to step out, and we looked around the world, and we ran into this Jerritt Canyon gold mine in the state of Nevada, and we just fell in love with it. And this is a mine that produced over 300. It's actually the largest gold mine in the state of Nevada, back in the 80s, producing somewhere north of 300,000 ounces of gold in the 90s. It's lacked investment, and it's just beautiful for us because this is a type of acquisition that just falls right into our forte. We love, not that Jerritt Canyon was particularly distressed, but it was lacking serious investment in exploration and development over a 15-year period. So we're going in, making this investment, and we're thinking we could double the size of this mine over the next 3 years. It's producing over 100,000 ounces of gold a year, which is obviously quite a lot of gold. So now with this core asset, another core asset in our portfolio, we are a bigger gold producer. We know that for sure. We're still looking around for silver mines, but we found this great asset, and we just had to take advantage of it.
And how are things coming along at Santa Elena? Are you still looking to go into production next year?
Yeah, well, the Santa Elena is, we bought that in 2015. It's been in production, our second largest mine currently. But there's a new area called Ermitaño, which we discovered through exploration back in 2016, and we've been developing that ever since. And it's coming in production in January of 2021. So it's going to increase the production at Santa Elena by somewhere around 30+%. So we're pretty excited about that. So costs will drop, production will go up. So yeah, we've got those two big assets, Jerritt Canyon and Ermitaño, which is currently our primary focus.
All right, Keith, bring it home for us now. Wrap this summer series with you here. For all those investors and your fans watching back at home, what are some words of advice you'd like to share with them right now?
I think that, well, buy physical silver for one. If you're a believer, if you believe what I believe, I think that, and some people obviously disagree with me, but I think that's a good solution. But also, when you're investing in the mining sector, it's a very volatile, very difficult sector to invest in. So just watch for good management teams and follow good management and stay patient.
On that note, Keith, I wish you a great remainder of your summer. Hope it's not as hot and humid as mine has been thus far. And I hope to see you soon in person.
Yeah, that'd be fantastic, Danielle. And thanks again for your time today.
Awesome. No, thank you. And thank you all for watching our summer series. We've just begun here on StansberryInvestor.com. Be sure to stay tuned. We'll have more incredible guests and content coming your way. And don't forget to check out MessageFromEric.com, where Eric will show you how to opt out of the traditional financial world and generate income like nowhere else in the world today. It's not buy Bitcoin or buy Ethereum or any other single opportunity in the crypto world. It's much bigger. So make sure to opt in today for this totally free event. That's it for me. Thanks for watching. I'm Daniela Cambone.